Welcome back to another episode of the pod, Talking Real Estate at Lakeland. I'm the managing broker, Larry Berry. Today I've got the dream team from Arvest with me today. I've got Chris Hodges, the regional mortgage manager. I've got Rachel Lee, the mortgage lending supervisor. And last but not least, Miss Lauren Vickers, the real estate loan advisor. I thank you all for joining me today. So we're going to start with you, Chris. We're going to let you just 10,000 level give us what's happening in the market, the real estate market 2025.
You know, 2025 has really brought a lot of changes to the market. I mean, I think we can say that about any market, but especially now. There's been changes to real estate contracts, buyer representation. There's been a heavy emphasis on the lending side of things, really, of home affordability. I think in our households, we're all thinking about groceries, kids' schooling, clothing. Everything's getting more expensive, and housing is not immune to that. And so the big thing we've been talking about is how can we help people get into homes if they want to? And then secondly, there's not a lot of inventory. You know, we were talking before this, you're liking that low interest rate you've got on your home. And
Yep.
a lot of people are the same way. And so they're not selling. And if they're not selling, people can't buy what's not for sale.
That's right.
And then the builders are really under some pressure to make the economics work to build a home that is affordable to people and still be able to make profit.
Yep.
So in those situations, it requires realtors and real estate companies like yourself and lenders to pivot. And we sometimes have to create different guidelines and programs to meet the need because that's what we control. We don't control the economy. We don't control the government and regulations. But what we do have some control over are the products and services we offer and how we offer them. And so that's really, and I know that's not the details, but I'd like for these ladies to kind of get into the details of what that might look like.
I actually was going to ask Lauren, so you guys offer a unsecured home improvement loan. Yeah. So somebody like myself, I get a seller, they call me and they say, hey, Larry, I want you to come look at my house, possibly list it. And I walk in and I'm like, boy, we could do a few things here. And they're like, well, the funds are tight. I'm like, call Lauren. What do you got for them, Lauren?
Yeah. So the unsecured home improvement loan is a unique product to Arvest. It has a really quick turnaround time. So you submit the application, you get the dealer invoice that would be required, and we can fund that loan the same day so that you can get your renovations done and sell your home. So a really quick process, no collateral, competitive rates in comparison to an unsecured loan.
So in real life, what that might look like is if Larry goes into a 1970s kitchen and says, hey, if you were to upgrade this kitchen, some new appliances, maybe new granite countertops, I could sell your home quicker and maybe get top dollar. Is that maybe happens sometimes?
It happens all the time. You walk in, a lot of times people have lived in their homes for 15, 20 years.
Right.
And they've not really updated during that time frame. We walk in and we're like, well, we could use some paint, maybe some new blinds, things like that. Like, hey, maybe we update the kitchen cabinets, countertops. I'm going to send them to you.
Yeah.
So you're going to... Go ahead, sorry.
So when you say dealer invoice, in that case, it's just, hey, get us a quote from your contractor about what work is going to be done and what it's going to cost. Is that sufficient?
Yeah, that's all we need. So we're going to look at that, base the loan amount off of that, and get your signatures and get you your funds so you can take care of those renovations.
Nice.
So yeah, we've got on the unsecured home improvement loan, we've got 5 to 7 year terms.
So they can structure that on a 7-year amortization schedule to where the payment's affordable while we've got their house on the market, and then once the house sells, then we can wrap that payoff into that house sale.
Yeah, but since it's unsecured, they don't have to pay it off.
Exactly.
So if they want to allocate those funds to something else, or maybe there wasn't enough equity to pay it off, it's unsecured, so they don't have to pay it off at closing.
Good to know, because I would have thought that would have been wrapped in as part of it, that it had to be
most
paid
home
off.
improvement loans are, but that one's a little bit unique.
So it's different than a home equity line of credit then, because that would have to be paid off.
Absolutely, exactly right.
Cool. Well, that's good to know. Rachel, I hear you've got good rates on VA loans.
We do. We have good rates on VA loans, and one of the things that we do is we waive the funding fee for our veterans, and that's a big benefit to them. It's not some gimmick that we're offering for short term. We've done it. I've been with Arvest for 14 years, and we've always done that.
So that funding fee, how much is that?
It's $1,345.
So it's going to save the veteran that, I mean, almost $1,400 immediately.
Just right off the top. Our fees are very competitive. with our VA loans.
Awesome. So you had touched on the buyer broker agreement and the changes that have come along. And one of the things that we see is people don't really understand the purpose of that. So as we send them to lenders, we like to work with local lenders here at Lakeland just because we want to create a relationship and a working partnership with you guys, just like we want to create with our buyers and sellers. So what we do is we have to have that sign. People don't understand. Before I walk into a house with you, I need that sign, whether it's for 1 day, 1 week, 1 month, 6 months, however long we want to put on there, as to how that realtor is compensated. We talked, I believe Rachel and I talked months ago about that ever coming into loans, if it ever comes up being a problem, how that commission gets paid. Is there any changes in that? Is there any updates, any experience since that change happened in the real estate world that any of the three of you know of, that where the commission is getting added on top, or is it just usually a standard contract and it's still?
It's usually a standard contract. I've not had that present a problem. Normally the realtors and I are very good communication about what that process looks like, and it's really not changed for the buyer at all. Normally they'll go ahead and negotiate that in with the seller as part of the agreement. But on the occasion that the buyer does pay that, we verified funds that they have that available. And
I would say, being the managing broker here, I'm going to say maybe 9 out of every 10 are probably still paid by the seller.
It was a concern in the beginning, a lot of the fear of the unknown, but once we kind of got going, it's not been a...
There was about 3 or 4 agents here a couple hours ago, and we were just chit-chatting about that, and that was one of the things. It's kind of what it always was. Mm-hmm. It's just now you're asking them to sign something before they walk in a house, and they're a little hesitant about it, and it's like it's a document you always have signed. Anybody who bought a house always signed it. Right. You usually just signed it in the bulk of the papers that you were signing, not in the beginning. So Chris, tell me a little bit about maybe what you guys have for first-time home buyers, some FHA, housing affordability. As we've talked off camera, is as interest rates fall, housing prices are going to continue to go up. So what's happening right now in your world?
Well, I fielded 2 calls today from first-time home buyers, and both of them, rightfully so, had deer in the headlight looks. One of them, parent wisely said, hey, call Chris, call Rachel, call the team. They'll walk you through it. The other one took advice from mom, and I love it that they're able to go to their parents and get information. But what they found is that information was dated because the industry has changed. So some of the things that Arvest has done is recently we lowered the credit score requirement on FHA loans, which is federal home loans. It's backed by the federal government. We lowered our credit score requirement from a 620 to a 580.
Wow.
Why did we do that? Not because we're trying to increase our risk appetite, but what we have realized is people with a 580 credit score may have a hefty down payment. They may have a situation in life that hit them. One of the common things we've seen is these student loans come out of deferment and then have hit people's credit and they didn't realize it. They're like, oh no, I may not be able to buy a house now. And so we needed to be able to account for that. And so we want people to know if you want to buy a home, there's more options available. So credit is one of them. If for some reason you don't qualify today, we'll put you on the roadmap to get there and help you work with your credit. But down payment assistance is another thing. How do I come up with a down payment, whether that be 3.5% on an FHA or 2.25% on a HUD 184 or closing cost on a rural development? And Rachel, I know you've worked with quite a few. What programs are you utilizing right now?
Absolutely. So the good thing is Mays County, Cherokee County, Wagner County, Adair, a lot of the counties in our area qualify for rural development financing, which is 100% financing anyways. But in the event that you didn't qualify for the rural development loan program for one reason or another, multiple down payment assistance programs that we offer internally with Arvest and with our lending partners such as Cherokee Nation. They have a mortgage assistance program for $25,000 that covers their down payment and closing costs. We can partner that with multiple different loan programs. We have the partnership with the Oklahoma Housing Finance Authority. It's called a bond loan. We can pair that with a conventional loan or an FHA loan for down payment assistance provided through the state. We also have internal. We can do an 80% first mortgage and a 20% second mortgage, or an 85% first mortgage and a 15% second mortgage. We utilize that a lot, especially not just for first-time home buyers, but for more unique properties such as non-warrantable condos, maybe manufactured homes that we have to get a little bit creative on the financing for. So lots of different, we like to say we're your best chance at a yes.
Yeah, absolutely. So in that, whether they're a first-time home buyer or a repeat buyer, what advice would you give for them to be financially prepared? What gives them the best ability to say, look, these are the things you need to have? We know good credit, or at this point 580. Shocked you guys are doing that, but
good enough credit. Well, I think the first thing is talk to a professional and don't make assumptions, because again, if you would have talked to our mortgage division 3 months ago, we would have told you a 620 credit score is going to be required on FHA, but today it's 580. So talk to your professional, have them look at your unique situation. The secondary market, so Fannie Mae, Freddie Mac, when people talk about conventional financing, variable income has become a real hot topic. And what is variable income? A nurse that just graduated college and went to go work a swing shift, right? Nurses are in high demand. They make great money, but their income varies. And so these agencies came out with these announcements, and it could be a person working over here at Mid-America Industrial Park making $30 an hour, but their hours vary. Well, they came out with these guidelines that honestly were burdensome. Lenders have been able to push back, get some of that stuff repealed, if you will, and said, hey, that doesn't make sense. The lion's share of Americans work for an hourly wage, and a lot of them work and make overtime. We need to be able to utilize that income to qualify. And so each situation is different. As Rachel mentioned, some are going to require a down payment, some won't. When they come to you and you're working with Rachel and the team, we are able to tell you, hey, the buyer's got enough money for their own down payment. They don't need a seller to contribute. That helps you in your negotiations when you're going to go make an offer on a house. So they've got to start with your professional, whether that be your team at Lakeland or with the lending team.
Cool. So Lauren, tell me the difference between a home improvement loan, unsecured, and the rehab loan that Arvest offers.
Okay, well, I would love to share that with you. So the rehab loan is going to use the property that you're purchasing. So a rehab loan can be used to purchase a property that needs renovations before you can do a regular mortgage on it. It can also be used to purchase land and a mobile home that's not already together. It can be used to purchase just a mobile home and cover the cost involved in moving that home to the property that they already own. So there's a couple ways that rehab loan can help our clients, and the difference in the rehab and the unsecured home improvement loan is the rehab is going to use the home as collateral. So on the rehab loan, we are able to loan more than the value as it is today. We do an as completed appraisal on that. So we may take a property that has a value of $100,000 and not be able to do renovations because there's not enough equity there. But with a rehab loan, we're going to take those renovations into consideration and loan up to that as if those renovations are already done. So difference in the rehab and the unsecured is that we're using that property as collateral, and then it can be used on a purchase transaction. It can also be used on your own home. So if you've got a home that you need to do renovations on and the renovations are going to cost more than the equity that you have in the home, a rehab loan would allow us to use an as completed value on that appraisal, so that we can get the funds you need to do your renovations.
Wow. Yeah, if you're watching or listening to this, that sounds like a good program. Reach out to Lauren, because there's a lot of options there, buying the trailer, putting it on the land, moving it. I mean, there's things that really, for me, when I think of rehab, wouldn't have even fell into that. So there's definitely some wiggle room there for you to help people get the loan that they need.
And that's one of the areas that Lauren and I partner with a lot. So like if I'm starting a purchase and for one reason or another it doesn't qualify for secondary market financing, or the repairs are too extensive for the seller to complete, I'm able to work with Lauren. We can go ahead and get some bids in to repair the property. She can go ahead and close on that purchase with the purchase rehab, and then I'll do a permanent loan later after the home is brought up to speed.
Okay, so that's real similar. An instance that I've encountered with that is one of my kids purchased a house, put together the bids, said, look, the house when we're done is going to be worth X. Do you send an appraiser out to, okay, so the appraiser is going to go out, look at the list of the bids, take the property, say, okay, here's what we've got. It's going to be worth X when we're done, and then you're loaning based off of that X. Then you have 12 months or so to get the work done. Then it turns it over. Rachel then turns it into a secondary mortgage.
That's exactly what it looks like.
Cool. Okay. Now what?
So another thing that Lauren has to offer is 100% land financing. So in this area, ag, lake, right? And so what is the purpose? Do they have to build a house on that? What does that look like?
Yeah, so the 100% land financing is for consumer purpose. So if you are buying the land for recreational use, to build your home in the future, any kind of personal use that you're not going to be using the property to generate revenue, we could look at that 100% land financing program.
And speaking of lake property, again, Arvest had to pivot whenever COVID hit and second homes and lake homes became so popular. And so the way that we finance those, the loan terms that we're able to offer, we've decided to lend out our deposits in that arena to be more competitive. And so if you think about the Arvest footprint, Oklahoma, Arkansas, Missouri, Kansas, there's a lot of recreational areas, second home, vacation home type areas. And so I think you started the podcast saying Arvest is your best chance at a yes, because like we say, real estate is local. And you've got to work with a local agent who knows the market. And that's the same with lending. You've got to work with a local lender who knows the market. There's not a lot of people that will work with somebody that can do a manufactured home or ag or a $3-4 million home all at one stop, and we can take care of
You
it.
guys even have people off camera that do FSA. I mean, you guys can really get into the gamut of the agricultural side if that person chooses. So, you had mentioned a little bit about some changes nationally in calling and getting cold calls, things like that. You want to touch on that a little bit?
Absolutely. This was really a collaborative effort across the industry where used to you would go apply for a home loan with your trusted lender. The credit reporting agency, Equifax, Experian, TransUnion, would sell that information. All of a sudden, your phone literally starts ringing 100 times a day from people knowing that you're shopping for a home loan. Those are called trigger leads. It was triggered by you applying for a particular type of loan. Thankfully, the Oklahoma Mortgage Bankers Association and the National Bankers Association has lobbied to get some legislation in place to really prohibit trigger leads being sold. So if you bank at Arvest and you go apply for a home loan somewhere else and we already have a relationship, we will still have the ability to call you. But you're not going to get a call from someone out in California who you've never heard of saying, hey, have I got a deal for you? I know that you're shopping for a home. Because I think ultimately consumers want to do business with people that they like and they trust. And they don't mind getting a phone call from their realtor at Lakeland or their banker at Arvest. But what they don't want is to be hounded all day just because they applied for a home loan. So be looking that should be going into effect very soon.
Cool. So in our world, in the real estate world, we deal with Zillow, Realtor.com of those. People click contact agent on Zillow. They think they're going to get a hold of the listing agent or whoever they see a picture of, and it kind of goes into a round robin, if you will, of leads that Zillow has sold, and agents are buying those leads up, and then they get some random person that knows nothing about the house. It's kind of the same concept there.
Yes.
Is, hey, this person's looking to buy, they're clicking, and you just hope they get you. In that world, that lender's putting out a phone call hoping that they can get you locked in. And we could sit here and go on for hours about the horror stories that we've encountered in our office where they want to use a Colorado lender. Maybe they moved from Colorado to Oklahoma.
That was
and
an
then
example that we just had with Stephanie when we closed that manufactured home recently in
Yep.
Salina. And the lender out of Colorado had called on them, and then we were able to research and found out the lender had never closed a manufactured home or a loan in Oklahoma ever.
Yep,
So,
exactly. And that lender's just trying to get somebody on the hook, and hopefully they qualify. And I hate to say it this way, but they didn't really care if the buyer bought a house or not.
Right.
If they did, they wanted to get the loan, but if they didn't know, well, they didn't know them, they move on. Where you walk in these doors, we're gonna guide you from start to finish. If we send them to your office, somebody walks in your doors, you're going to guide them start to finish. We want to make sure that person gets what it is they're looking for.
Well, when you run into that buyer at Walmart this week, right, or if you run into him at church on Sunday, you want to be able to look him in the eye. This is a lot more than a transaction to us. It's our community, and we really want our community to be happy with the experience, not just the home that they buy, but the experience. And so, what I would encourage people is, hey, talk to one of the agents at Lakeland. If you have questions, ask people. Ask for reviews. Ask for feedback, and you'll find that they do a great job.
Yeah.
And same with your financing. Ask for referrals. Ask for information and say, hey, I trust you, but Give me some data. Give me some information from other parties that have done business with you that would refer you. And we're happy to do that.
Well, I, for one, personally like to work with somebody who is involved in the community. You guys are on your way back from a community event. You're at a Home Builders Association meeting. Stopped by, did the pod with us, and we appreciate that. But that's what, to me, people should be looking for. Give me that lender that's going to those meetings, going to these fundraisers, whatever it is, into the community, that's going to donate that money back into it and help us all, at the end of the day, build up a nice place to live in Northeast Oklahoma.
And it is nice.
And it's getting crowded. All right, guys. And if you got anything else, I'm open ears. If not, I appreciate your time. I really appreciate you guys coming in, stopping by, saying hi. I know Rachel and Lauren have been here a lot more than you. I don't know where you've been hiding, but maybe you can come out a little bit.
I make it over here once a year or so.
No, the girls came out, helped us in a sales meeting. We have people come out all the time, our real estate professionals and partners, and we appreciate you guys coming and bringing breakfast for us most of all. So thanks for another episode of the pod. Until next time.
Thank you.